Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I hear you loud and clear, Coach Jay. And to our audience, welcome back to this exciting Monday.
Welcome to all of our buzzer beaters. Happy Monday. Pretty crazy day out there in the market. So hopefully everybody made it out all right. Let us know how you did in the chat. Were you up on the day, down on the day? Maybe you stayed flat for the day and just watched the fireworks. Um, Coach, we were talking in the green room. This is for sure in the top 5 craziest days I've ever seen in the markets. Um, Probably top 3, if not if not number 1. Uh, we'll talk about it when we get into the charts, but pretty crazy day out there in the markets.
Yeah, not just equities,
No, it was
crude,
across the board.
bonds. Yeah.
Across the board. Well, welcome to At the Buzzer, our market recap. If this is your first time here, I'm Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. May talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If it's our first time meeting, I'm Coach Jay, been a Topstep performance coach since June of 2023. Been trading for the past 13 years and in the futures markets for the past 6, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experiences, some wisdom, and hopefully help you become a better trader.
Stuff. Thank you for that, Coach. Let's go over to the Trader Hub real quick to see. We really didn't have any planned news. We did have a closed board meeting Fed, but outside of that, there really was no planned news. I think there was some unplanned news and maybe even some fake news, depending on who you ask. It was a lot, lot going on today. Um, we kind of came in, we gapped down last night in the equities. Again, no planned headlines. We do have some headlines later on in the week. We got PPI, CPI on Thursday, PPI on Friday. But the unplanned headlines, Coach, like we've been talking about since February, those are taking precedent right now and causing the volatility in these markets. Anything you have from the news side, Coach?
Yeah, the fake news, real news, headlines coming out. I saw a headline that there is a lawsuit being drafted up by some business leaders against this administration.
Hmm.
Well, there's some Republican congressmen getting um, concerned. All of that is adding up to this volatility, the randomness of it. So as we preached, even February, even November after the election, this is expected volatility. It sounds crazy to say, but focusing on, and we'll get deeper into that, but focusing on how much risk you can afford in this kind of market, because not only can anything happen, anything will happen. Um, so we'll get deeper into that, but yeah. What was Friday's unemployment number?
Don't remember.
Yeah, I would
Couldn't
remember it
tell you.
coming out.
Yeah, it
So
was pretty insignificant. All right. So let's get into the charts. Switch over to the quote board. We have 35 different markets we can trade with top step accounts, not just the equities. And today to the downside, we had the ultra bonds down 4.04%, natural gas down 5.16%, and micro Bitcoin futures, our biggest percentage mover to the downside at 6.69%. To the upside, we had wheat futures up 1.32%, soybean meal up 1.91%, and silver futures, our biggest percentage mover to the upside, at 2.46%. Might be asking where are the equities? Didn't we just have a crazy day? Crude oil down 1.52%. The S&P up 0.54%. Gold down 1.2%, and the Nasdaq up just 1%. That's from Friday's settlement. Uh, that does not tell the story for how we actually traded today. If you were watching at all, uh, markets did a lot more than trade up 1% in the Nasdaq. So why don't we talk about it, Coach? We are on a daily chart right now. What are you seeing on the daily before we kind of zoom in? This is the beginning of the week. What are you seeing on this daily chart, coach?
Well, a huge range. Um, the range in the Nasdaq today was 1907.75 points.
A lot of
That's
points.
a quarterly move. And that's absolutely mind-boggling to have that big of a range in one day. So looking at that daily range, and we've talked about this before, could this be a blow-off bottom? Well, it's got a few of those in my way of looking at it. It's got a few of those components. We have a huge wick on the bottom, turned around, came back, finished higher, with a very large range and pretty good volume.
Yeah, one of the outside of Friday, because Friday was the highest volume we've seen since 2022. Today was the second highest volume we've seen 2022. So pretty significant there. Just for a dollar wise, I know, you might not get the grasp of what Coach Paul is saying with the 1900 point range. Low to high is $37,000 with a one lot. With a one lot in the mini Nasdaq, that low to high move is $37,000. And if you watch how it happened, it gets even crazier. We'll zoom in and take a look at that. But crazy, crazy range. What was that range in the S&Ps, coach? The daily range?
Well, the daily range in the S&P today was
About 460.
453 and a quarter points. 453 and a quarter. The average true range, which is expanded, is the highest and since probably 2022 is 126. We were almost four
Four times
times
that.
that.
Yeah. These are
So it goes back to my thing. This could be a blow. And we're talking. First of all, this isn't trading advice to tell you what to do. This is a review. Now, from a technically speaking, blowout ranges, we talked about copper on the upside last week. Well, let's look on the downside with big volume, very large ranges. And one of the key is when we were kind of shocking is the market's up 0.25%. So that is to me a sign that the selling has a probability of a climax. So with those ranges and that type of volatility and finishing basically unchanged, that's a good sign. If but that the selling is climaxed, at least for now.
awesome stuff. Thank you for that, coach. Let's zoom in a little bit, go down to a Nasdaq chart. We did the opening call with Hoag last night, and we talked about the gap down. So we gapped down from settlement. It was about a 4.5% gap down. We thought we were going limit down last night, where it looked like the Nasdaq really didn't have a chance to hold up. We had that 5% level. I think it was 16,662 in the Nasdaq, where all of our top step accounts need to be closed, and Hogue calls it the top step effect. That 5% level, and we've talked about this before. Maybe when the markets weren't as volatile, but looking at that 5% or these big percentage number levels as areas of interest to trade against. I was talking about it when it was 1% down, 2% down, but this 5% down level I have marked out here on my charts. We can see in the overnight, didn't really see convinced selling below that. You got to think, maybe there's some profit taking of shorts or some longs, putting some passive bids out there to hold up these markets from going limit down. But that 5% level did hold on a 30-minute. We gap down, and let's just get to the New York session. Switch these charts over to regular trading hours, and we'll take a look here. So we have the New York session open, coach. Have VWAP from that open doesn't leave the range. Well, kind of leaves the range to the downside. Initially, I think we came in, Dakota and I both looking for shorts during fast markets. It was a pretty good short, right? 250 point move to the downside from that opening range, but we tagged that 5% level, and at that point, the selling stopped. Uh, the selling stopped, coach. And before we get this craziness, go ahead. You were gonna say something.
Oh no, go continue.
Yeah, before we get this craziness, it was, a failed selling move down at that 5% level. Could you buy it here? Maybe, maybe not. I know Dakota was talking about looking for a long. He was locked out of his account for the first half an hour. Whatever he saw, just kind of 3 bar reversal here, was a good call. Does he know that this is going to happen? There's no way, right? There's no way. So if you're in this long and you were in it, and sometimes you're good, you follow your process, and then you get lucky, right? I think a lot of us on the stream has said that this was one of the craziest days we've seen in the markets, um, where we were down 5%, talking about potential limit downs, and then a half hour later, we were talking about the price limits to the upside, because we moved 10% from low to high in the Nasdaq.
That kind of movement, like we said, is also indicative of selling climaxing. And
Yep.
also, look at one of the things is look at that. In the first candle, we had big selling,
Hmm.
and S&Ps. When we get to that, I got short. It was similar to this, and I took on one micro planned $200 loss on one micro.
Mm.
It was a great trade.
Yep.
Short. It wasn't. Did it make money? No, but it was worth the risk. Now, what happened here? Let's go through it. So we have that large volume. We have continuation to the downside, but that reactive volume took it back above VWAP. And what I noticed here is what happened to VWAP. There was enough buying to turn VWAP around.
Yep.
And so there was buyers waiting. I mean, that would
Yep.
that shows that there's institutional interest. It wasn't just a bunch of people going, I think it's a good buy here. No, that had to have been some type of institution.
Yep. And what we, kind of were talking about during fast markets as well, was this is around the time, we already got the reversal prior to, but I think this was around the time that the headline came out that we may be delaying tariffs for 90 days. I think it ultimately came out that that wasn't the truth. The one thing I do want to point out here, coach, and Andre made it a point as well, these moves, sometimes the scale on the price axis can be a little bit deceiving, right? Where if you're looking at this and you're like, oh yeah, this is just a reversal. This small candle at the bottom of my screen right here is 90 points. We can barely see that. That's 90 points. So, you know, traders, we do have to make the adjustment of, and I think this is where it helps to pay attention to that ATR. Uh, the chart is going to do its job to kind of consolidate the information so you can actually see what's going on, right? If we were using, you know, December 2024's price scale, uh, this move wouldn't fit on the charts. Right. You would have to zoom out a whole lot. So your platform is going to do you a favor and adjust to the volatility of the markets. That being said, we're seeing, in the thick of things, 150-point 3-minute candles in the Nasdaq. Coach, how do you manage risk with 150-point 3-minute candles?
Well, first of all, you said ATR.
Yep.
And at its peak today, what was the 3-minute? I know the half hour. I was watching the S&P. So let's go. Let's look at the the half hour, and look at the ATR.
After the first half an hour, the ATR was 81 points in the S&P.
In the half hour.
Mm-hmm.
What was it in the after that?
86, 92, 93. Then it kind of settled.
Okay.
Yep.
So that's in a half an hour. Let's just go ahead. How much money is that?
A lot, a lot of money. So if you don't manage your
It's
risk, or you're trading minis in this environment, you can trade this if you want to. But I think we even saw Dakota do it, right? Where that volatility is increased that much. We're seeing a 10% move high to low. Once the dust settles, even after the dust settled, Dakota was trading micros, right? And trading it with a 300-point stop on a one lot micro, which was very reasonable.
Yeah, which is kind of matches up. It's even bigger than and two ATRs.
Yep.
That's sick, and he's risking $600.
Yeah.
Yeah. Now, understanding the range, that range gives you a clue of how much can I afford? Can I afford to get in here? Am I willing to take that risk? And do you accept it? Well, you might find out I can't accept that kind of risk. And you could make a really good decision. I'm out. I'm not trading this. It's just too volatile. Maybe you go look at corn. Maybe you decide, oh, not here, not today. I'm gonna do something else. That's a
Yeah.
good
It's an option
decision.
for
That
sure.
is an option.
Coach
Um,
Robert says in the chat, Dakota was trading with a 300-point stop loss and still got stopped out of a trade, right? Where, and we said it during fast markets, but if you're trading with a 20 point, and the reason why we're going over this so much is because, we saw it during the fast markets chat, traders like, hey, why aren't you guys getting in here, right? Don't you guys love this volatility? You have to try to make sense of what's happening before you just jump in because, and I said it, putting on a couple micros just as feeler trades, I want to get a feel for this market as well, right? Where if I'm saying this is top three craziest trading days I've ever seen, I can't trade my normal mindset, right? I'm usually, hey, around a 40-point stop is about decent on a net on the Nasdaq. If I traded with a 40-point stop today, coach,
it's back.
yep, it's back.
I I
That's what
actually
happens
feel
with trading with a 40-point stop in this environment right now. Go ahead, coach.
and that many times too,
Yep.
because the market is speeding up. How is it speeding up? Because why I will look at the range, that's a function that market makers use because they're taking these trades because it's part of their incorporation is
Hmm.
the market. Now, when volume becomes too big, they have to do what? They have to adjust their bid and offers.
Right.
They widen them. They also take less on on the bid and offer. If they were 100 up, they might go down to 30, 25. That happens in this dynamic system of trading. That same size order that was an hour ago defaults to a bigger order. It's going to have more effect on the market, and it's compounded and it feeds upon itself. And it's why it's so important because so we were talking in the lunchbox and I'm different. I use market orders.
Oh yeah.
But if I'll look at the dom, and if I see if it's
50
too
tick spread
wide,
in the Nasdaq.
yeah, if
How do you
it's too
trade?
wide, then it gives me some information. Okay, it's direct information as a result of volatility.
Yep.
Okay, if I can't accept that, then I won't take the trade. If I can accept that, I don't mind a market order. But I saw that today, and I didn't trade the Nasdaq,
Yeah.
micro, mini, or otherwise. It's in flux.
Yep.
And you've said it before. Don't swim in front of that shark because that
I think
that's
the sharks were eating sharks today.
yeah, they were. But now you're in between two sharks.
Right. We got a question here from Mindful Trader. When I see the low made on a Sunday open or during the New York session today, I don't see exceptional volume on that low. Does that mean it can revisit again soon? Uh, so you're talking about, give me over here. So I get what you're saying, right? We had low volume down here at these lows during that overnight session. Can we revisit there? Because that would be kind of looked at as a low volume node. We can, but we also got to remember that uh, these are environments that are pretty uncertain to everybody right now, right? So can we go visit this low from a price perspective? Yes. If we are hearing that there's deals being made on the tariffs and things like that, and those are actually true, who's to say that we ever visit these prices again, right? If that's the case, right? There is a point where if you look at, like COVID lows or things like that, we haven't revisited those prices. So like Coach was saying, if this is the reversal move with all of the volume that we've seen, these could be the lows. So I wouldn't hold on to hope that this has to trade again. Um, if we start to see some price action and some real selling, then I would look at it as a potential area. But just because there's low volume at that low doesn't necessarily mean we have to go trade them again.
Great point. We don't, but it goes to the next. Let's go to a next step with that.
Mhm.
Let's see the session VWAP, because it's a great point. We made that low, and we didn't revisit it volume wise. Actually, we kind of did, but the volume this morning when we tried to break didn't follow. The selling
Right.
didn't follow, but session VWAP was flattened out. We haven't seen that this on the way down.
Nope.
So, again, what I can infer from that is we found, believe it or not, some stability
Hmm.
disguised in this huge range.
Yep.
I'm
And
not saying this is the bottom, but what I'm saying is that it's the sellers stopped. The selling has stopped in the short term.
yeah,
Now, can it
in
continue,
short
Reed?
term, as short as today, right? We also do know that some of these bear market rallies can be some of the strongest moves, and I think that's what we saw today as well. Let's see whether or not we continue to sell, or we turn around and continue to buy from here. Anything else you have on the equities, Coach?
Yeah. In the S&P,
Yeah.
3 minute, from the opening, um, that that buying volume adding up, because I was trading that and I was short. I got stopped out, but there was a big message there. If we look from that bottom on those consecutive buying candles, they turned VWAP. That's I think that's important. Where when I saw that, I'm done selling for the day.
Mm.
For me, but there was a message. There was a buyer there that turned. Now the turn VWAP, especially on a breakout, because that was a breakout. There had to be some volume,
Yep.
and boy, there was trap shorts too, because that was
Oh
a
yeah. I
puke to the
think that's
upside.
why we moved as fast as we did, right? Think about again, and we've talked about this, right? The narrative and all the tariffs and all this stuff is the reason I'm calling it the reason we've been short. There were some people saying, it's dangerous to use that narrative as tariffs are what's leading us lower. What else is it? Right? What else would it be? And the kind of sign of that is what turns out to be a false headline to say, hey, we're rolling these back, does this to the markets, right? So you said, Coach, trapped shorts. If I've been short this entire time, or I'm continuing to go short because I think, hey, this market's going to zero, uh, as soon as that headline comes out, those trap shorts, what do they have to do? They have to buy it. Right? I got to get out of this short. I've been short because, this negative news has been leading us lower. Wait, that negative news is gone now. I got to buy this. And there's no offers at that point because who's continuing to sell a market that the bad news is gone? And I think that's why you see an 8% move from high to low in the S&P because everybody's trying to run for the same door, uh, trying to get out of here. And that was it. One thing I do want to talk about, Coach, after the first hour, where things settled down a little bit, and this could have continued to be a crazy day, but we've talked about this, a little bit. I know Coach Robert preaches it as well, not trading the open. And we look at the open all the time. You and I both looking for opening range trades, but after that first hour of trade, and I marked out that range in this green box here. Outside of this crazy volatility, Coach, we had a range day.
Yes, we did. And reflected by VWAP, flattening out.
Yep.
Because there was the volume just decreased. And like you said, there was a huge panic on the outside to get out of shorts. Then we settled down and looked now I'm not a good range trader. For a range trader, this is like paradise.
Yeah.
VWAP right in the middle, buy the low of it, sell the high, buy the low. I'm no good at it, but there's certain people that are. But I think this is, like I said, we haven't seen this since Independence Day. Was it Independence Day?
I think
What was
so.
the name of? Yeah. So
Liberation Day, you're talking about?
Liberation Day, that too.
Yep.
But like I said, I mean, I'm not calling it, but it's some technical indication of a blowout bottom. But
We got a question here. Go ahead, Coach.
We deal in probabilities, not nothing's guaranteed.
Right. We got a question here from Shubham. How do you see VWAP these days? Is it reliable? I think anything is as reliable as your interpretation of it. So, like Coach Paul was just saying, this VWAP flattening out right? Because look pretty crazy here. Of course, that extreme volatility is going to pull VWAP up with us. And I'm not, am I trying to make decisions in this zone right here? I think I put on a one lot micro trade just to kind of get a feel for this to see if we were going to continue up. At this point, I'm not looking at VWAP, to be honest with you. But once it starts to flatten out this way and the markets cool down a little bit, and you can see that later in fast markets, Dakota and I both took a short. And I liked that short because this VWAP did flatten out, right? Where it looks like we're starting to establish a range. I was looking at this candle right here, and I can't remember exactly the price that I got short. I think it was 51. It doesn't really matter. But because this VWAP started to flatten out a little bit, I was okay with taking shorts back into this range. So that's how I look at it there, right? And I think again, it's as reliable as the information that you take from it. Now, whether we have a 8% high to low day on the S&P or a normal trading day, I'm going to read VWAP the same way. Is it trending or is it flat? And then I trade from there.
Yeah, one thing about VWAP, it is reliable. I wouldn't look at it in those terms because it's an objective. It's the size of the buying versus the size of the selling in its simple form. I use it in a short term, not that I'm above it or below it, but is it trending? So don't think of it. It's not, it's an objective output of buyers versus sellers with volume incorporated in price. I like it because price alone doesn't reflect the volume traded at each price. Not every price is the same. So looking at like Coach just described, is it trending? Is it flat? Because it's a dynamic system. As the day goes on, there's more information. VWAP gives that output, and you can use it as a reference to see how the bigger players how the bigger volume is playing out. We've seen since last week that VWAP is trending lower, trending lower, trending lower. Today was the first day where we, and like Coach said, after the first hour, it just
Flatline.
flattened out.
Flatline. All right. Anything else on the equities, Coach? Do we want to move on to something else? So we did close that gap down that we had. But anything else you're looking at, Coach? The equities?
No,
Awesome. So let's move over to gold. Gold kind of broke my heart today. I was short.
no
Thought I had a
gold
good
ring for you.
thought I had a good thing going, and fake news stopped me out before it eventually hit my target. Let's take a look at gold. Let's look at a daily. What are we seeing here on the daily chart, Coach? Oh, look at that.
We touched that 50-day moving average,
Yep.
and we're sitting right on it. Inflection point. I'm going to keep a close eye on that. Opportunity lurks right there. I'm looking to make money off of your heartbreak and buy it. No, Coach, I understand your heartbreak. But look at the range, too. Below the 20 was the high, right? Down to 50. So this is an inflection point with, look at the selling volume. This, instead of 3-bar reversal on a daily,
Yeah, technically it is.
technically it is. So, I think you're going to get a good idea on the opening tonight. Wow. So we've come a long way in a short period of time in a upward market. My bias is still to the upside. Now on a day trade, that really doesn't matter.
Right.
What matters is, so let's look at the half hour. Oh, well, look at, what was the high?
The high on the half an hour was 30.81. This was yesterday. This was Friday's
Yesterday,
price action.
Friday.
Friday's price action. Here is today's price action.
So we're moving away from that 200. Boy, oh boy. I'm going to watch it tonight. I'll take either side of this if we get a breakout of urgency early.
Yep.
Because if it does, I think you can see a bigger move. We didn't find. We found that, but we found a range. Boy, these are all. I think if we took the title of the gold and the S&Ps, removed the prices, we'd see the same chart.
Oh yeah.
But gold definitely did not recover. It settled below that VWAP and picked up speed. Tonight's a big night. I'm writing it down right now. I think there's a good opportunity either way.
I believe so as well. Gold bouncing off that 50-day moving average, like we talked about. The trade that I was looking for in gold, go down to a 3-minute chart, was a short. So gold opens up at 8:20 Eastern time, 7:20 Central. I didn't look at that specifically for the opening range. I just wasn't at the charts. But when we got the New York session open, is right here, and we've talked about this being a time where volume does come in. Got that range there in the white. Early. So I just jumped in on this short here, looking for lows of the day, pretty much, right? We got some price action in my favor. Could I have managed this trade and took some of it off? Maybe. I was in a couple micros short. And really, my stop was just a little bit too tight. I think I had my stop at 30.52. I needed to have it at 30.57 to be perfect here. But nothing is perfect in futures trading, like Hoag says all the time. We got that news to come out. We rejected right at the highs of where we opened up last night in gold and came right back down. So why am I talking about all this? Measure some of these ranges. Look at our opening prices and things like that for potential areas for the market to trade to. And then at the same time, right, we came up, tried to fill the gap down that we had in gold, couldn't do it. And then that's when we get our trade. So Is this a trade that I could have gotten back in? Maybe. But I took the risk. I thought it was a solid idea. This is a case where your location was right on the trade. Maybe the timing was wrong. But that's what happens in trading. If I was still paying attention to it, maybe I would have taken the trade again. But this was also when the equities were rallying, 1,000 points in 15 minutes. So uh, maybe miss this opportunity to the downside. I think that might be the move that I'm looking for to the downside, coach, to start potentially buying this again. But that's my thought. It doesn't really matter what I think. We'll see what the markets say, and I'll trade it from there.
Did you accept the risk when you put that on?
100%.
There you go.
Yep.
Now, the next question to me would be, should I have taken the second trade? Well, is have a budget for how much you can lose in a day for your personal daily loss limit. And leave room, I would say, ideally, leave room for 3 trades. So, if that one it incorporated, say your daily loss limit is 400 and you lost 200 on that trade, well, you have room to take another trade.
Right.
If it was 325, you're done for the day. Turn it off. Go do something you enjoy. Because you know what? Your temptation to go back and go, well, I'll try
Yeah.
it again. And then, but it doesn't work. It's unplanned. It's random decision making. So accepting that, okay, it's a loss. Could have been a winner. Next, can I afford the next trade? If not, one of the best decisions you can make is to turn it off. Tune in to Topstep TV, hit the like button. Don't trade again.
Well, like Coach said, if you haven't done so already, I want to thank everyone for joining us today. Hit that like button if you haven't done so already. Tell your friends and family to subscribe as well. We got a question here from Ray Bougie Minimalist. I have recently joined Topstep. I have found that my Topstep chart versus TradingView chart is not the same. One looks bearish, whereas another is bullish. Is the data different? The data should be exactly the same. The data should be exactly the same. I haven't noticed that. Ray, if you want to send a screenshot or something in Discord, you can put it in my Discord channel. We'll take a look. But from what I've seen, the data has been the same for TradingView and TopstepX. I think there was one time where I was using a platform and I was comparing charts, and I'm like, why is this chart so different? And the other platform was on 15 minutes delayed data. Don't ever trade on 15-minute delayed data.
Well, I could make better decisions.
Right. If I had 15-minute advanced data, maybe, yeah. It's just like, oh, this chart is telling me what's going to happen 15 minutes from now. That'd be perfect. Whenever they come out with those charts, coach, I'll let you know.
Yeah, the feed, by the way, the feed is the same feed, the data feed for both. So it should have now, they could be a difference of seconds,
Mhm.
but overall, they're getting the same data feed.
And someone also said it, just make sure you're looking at the same contract dates, right? If you're using TradingView charts, make sure if you're looking at like NQ, look at NQ1 or whatever it's called. Make sure you're looking at the most up-to-date month. All right. Does anyone know if any institutions had position in the NQ or ES equities slightly below the current levels? I'm going to say yes. I don't know that for sure, though. What about you,
Yeah,
coach?
I don't know.
I don't know. And then we got one from Shubham. Oh, Shubham, by the way, happy birthday. Happy birthday to Shubham. Happy birthday to
Oh,
MP as
happy-
well. CEO of Topstep, the guy, the reason we're all here with Topstep. So shout out to MP, shout out to Shubham. Happy birthday. Thank you for joining us on your birthday, Shubham. I know it can be very contextual question, but how many points of stop loss in micro gold should be considered? Good question. I was actually just measuring that out. Coach, how many points should I be looking for as a stop
Coach,
in
you were
micro gold?
just measuring that out. So
was.
I'm going to let you finish that.
All right, cool. So what Coach Paul's suggestion normally is a 2 ATR stop on the time frame that you take the trade. So again, it's important to say the time frame that you take the trade. I took my short in the gold uh, when the 3 minute ATR was 6 points. So my stop was about where it should have been. I actually gave it a little bit more. I was about 3 ATRs. Coach Paul's suggestion is going to be 2 ATRs. Right. So in this case, whether I use 2 or 3, I was getting stopped out of this trade. Right. But a 2 ATR stop, looking for about a 2-to-1 trade. And in this case, it was just a case where I was going to get stopped out, but I'm not going to pay a whole lot. So I think Shubham, and for everyone, figuring out how to trade with a 2 ATR stop on whatever time frame you trade is a great way to measure risk. You're looking, based on Coach Paul's suggestion, looking for a 2-to-1. Sometimes we think 2-to-1 and we're like, oh, that's too small. I need to trade for an 8-to-1 or a 10-to-1 to be profitable. But if you trade with a dynamic risk based on the market, that 2-to-1 trade is usually not going to be a small trade, right? It's a pretty big one. Go ahead, Coach.
That's very well put. Because here, one of the things is 8-to-1 trade compared to what?
Right.
It's always compared to your risk. But if your risk is, if you're willing, I only want to risk
2 points.
2
In the
points,
Nasdaq.
then you're going to get stopped out a lot.
Yep.
The death of 1,000 cuts. Giving some room and going for 2-to-1 is easier to execute, and it's reasonable. It's reasonable to get 2-to-1 on a day trade. Using that formula. Now, hey, let's say you just used the high volume mark after the opening and go from there and measure it from there. Tonight, I'm going to use the first half an hour. Then whatever it is, if it's 5, it's $10. Well, $10 on a mini or on a regular size gold is $1,000. Well, I don't want to risk $1,000. Oh, a micro is 100. Okay, I could do one micro with 2 ATR stop, 2-to-1. It's reasonable.
Let's see. Can't read that name. What is it? Lockaway. Yeah, I got you. I watch the show all the time. Coaches, have you guys always talk about trading micros, and I like to trade minis. Today I am sold on the power of micros. Traded one micro ES for $450 profit. Great trading. What I want to ask as a follow-up question to that, what was your stress level trading that one? Not only did you make decent money, pretty good money trading a one lot micro, what was your stress level trading that? And while you answer that, let's take a look at gold. Sorry, crude oil. Crude oil, Coach. Traded below $60.
Yeah. Boy, in gap, everything gapped.
Everything.
We're talking, this Sunday night gap is happening all the time now in different markets.
Yep.
We don't see it on the daily, but here again, there's some look at the volume. This isn't a roll. This could be a climax selling also. We went gap lower. We're how many ATRs away from the 200-day moving average?
About 4 on a daily.
4. So we saw some responsive buying, and this all comes back, by the way, tariff news. Whether it's fake news,
Yeah.
I don't know. We don't. Here's the other thing: is we don't know anymore.
No idea.
But what can you control?
Your risk.
Your risk, your entry, and your exit. So, looking at the half hour. Is this the half hour?
This is a 3 minute, but we'll go down to a half hour.
Okay. Now there we go. There's balance. Believe it or not, it looks much like the equities today.
Yep.
But with VWAP, we've been trending down hard. Today, it's been sideways in the range of the first half an hour of Sunday night. We could get a break out of this tonight. It's going to follow the equities. It's pretty far away from value. Look at that. What's the highest volume of the day?
This 30-minute candle right here. So, Coach, and I'm just kind of looking at this. I know we had this a very similar move in the equities as well. This happened on a headline that was confirmed, that was denied, right? So, has anything really changed?
No,
Highest volume. Go ahead, Coach.
yeah, according to VWAP, we're still in the range.
Right.
Is anything? That's a great comment. Well, one thing that has changed that we haven't seen since whatever day that you want to call that day is that we found some type of balance.
Yep.
And it was a huge range in crude today.
Yeah, 5 points.
$5,000 range. And look at that. What was the range of that? $3?
This 30-minute candle here, yeah, this was about $3. 275.
All right. But with VWAP being flat, when I'm talking flat, it's within the opening half an hour of last night. Nothing really changed, but it's not easy to sell it anymore. We found some short covering, and it's short term. We found a base. Let's see how we move through it tonight.
Crude is giving us some pretty nice ranges over the past couple of days. I know everyone was complaining about it contracting. We're our daily ATR right now is $2.34. All right. Let's see, Coach. Any other markets that you want to talk about? We got about 12 minutes left. If you guys do have any questions, feel free to put them in the chat. Andrew is doing a great job as always sending us over to us. Any other markets you want to take a look at, Coach?
Let's look at the bonds.
30-year, 10-year?
30-year.
All right. What are we looking at here? Go out to a daily.
Daily.
200 moving average right here, guaranteed. Oh, no. I missed it. It's a little high. All right.
50.
Right.
But look at the size of that candle. The bonds had almost a 5-handle range. I haven't seen that since I was in the bond room. It was 20-something years ago. I don't think we've seen that. Maybe COVID one day. That also is at a crossroads. We've held at 50, bounced right to it. But that volume, what was the volume today?
That volume candle, if this is correct, that's the highest volume. I always try to verify this because we are trading futures contracts. So is it the highest volume on this contract, or would that be the same on a continuous chart? But highest volume we've seen in a long time. I'm gonna pull up a trading view chart on the side, Coach. But go ahead if you want to keep going through this chart.
Yeah. And an engulfing candle. It was just enough to get everybody hurt. But mark that candle out. Are we going? If we break out of that range, we should see continuation. Because that bonds just don't trade like that. Something upset the apple cart. Whatever the news is, but we finished near the lows of the day. We gapped up. There was follow through here. This is very conspicuous. Yeah, that was panic selling with
Yeah.
with volume. This thing could change course. I could go into some news. Is China going to stop buying U.S. bonds? Um, I could create 1,000 different scenarios. It doesn't. Here's the technical picture. This market sold hard, did not stop all day after being rallying and looking like it was going to go to contract highs.
Yep.
That is concerning if you're long. It could be the beginning of a new break to the downside, but that was very as dramatic as the equities are. This is maybe even more dramatic because bonds don't act like this.
Yeah, this looks like an equity chart. I think I might have just lost data. Last thing I do want to pull up, and if you guys have any questions, let us know. See if the chart actually loads now. Pulling up micro Bitcoin because we broke below and held below that 200 moving average, coach, on the day.
Yes. When we talked Friday, it was the
The one
only
thing
thing
that
that was what was stable.
one thing that was
Until
holding up.
well, actually, it's the move started Sunday early on the cash market. Remember, Bitcoin trades 24/7.
Yep.
We held at 200 and on Friday, but I mean, right here, when's the last time we've settled below that?
That was March 10th.
Yep, we popped above it, but now look at the volume. That volume is indicative of liquidation of longs.
Yep.
Why?
We've been talking about who might be liquidating, right? If you get margin calls all over the place, you sold gold first, maybe now you're selling Bitcoin, sell the farm, so your kids' bikes.
So your baseball collection,
yeah, right? We're making jokes and things like that. We are seeing these markets sell off. There are real implications to this, right? You hear us, you might hear Hoag say, don't look at your 401k. We'll tell you when it's safe and things like that. So I do just want to say, like, if anybody is, in longer term holds and things like that, or looking at your portfolio and it's down, these do sometimes end up as just blips on the chart. The selling that we're seeing right now, but it is, it's serious what we're saying. My brother was saying he was talking to a friend at a birthday party over the weekend, and they were saying that like parents might not be able to retire now when they were looking forward to retiring in a year or two from now. So is really serious stuff that we're seeing here. So hopefully everybody is okay outside of what we talk about in the charts all the time, because we're looking at candles go up and down on the screen, but there's money behind all those candles.
point well taken. This is real life implications for this.
Yep.
Going back to Bitcoin, one of the things that the last time we were down below the 200, what was going on with the 20 and the 50? They were rising.
Yep.
They're not rising. There could be some pressure here. Looking at the downside. Look at that candle. Look at the thin.
Oh. Yeah.
So
go ahead.
Let's look at the half hour.
All of these charts look exactly the same.
Right. For this left, the VWAP left, boy, that was a tough trade. But hey, it kind of looks like the crude oil.
Yeah. Yeah, they're all looking exactly the same.
But longer term, under the 200, after showing some stability, the highest volume was on the sell side. Doesn't look healthy to me for a longer term. If you're a hodler, what do you care?
Right.
But we're traders. But that kind of shape to me that's for my type of trading. That's tough.
I do just want to bring up one more thing before we get out of here, and I want to thank Andrew for sharing this. Something that we've been talking about pretty much every the past couple of days. Let me just confirm that this is what I'm seeing. All right, cool. So thank you for sharing this, Andrew. I'll blow this up on our side so we can take a look at it. All right, just so everyone knows, price limits for tomorrow. Thank you, Andrew, for putting this together. These are the 5% up and 5% down prices. You can take a screenshot of this, put the levels out there on your charts. In the event that we do trade near these levels again, remember Topstep accounts, if you're in a funded account, XFA, or a live account, equity market that you're trading is down 5%. You need to be out of those positions. So you want to go ahead and put those numbers on your charts. It's funny because they didn't change too much. Remember, Nasdaq settled like a quarter of a percent higher than it settled on Friday. So I think we were looking at 16,662 for today's session. But here are your numbers for tomorrow, and they do exist to the upside as well. Where we were talking about today, do we see a limit up type of day? We were up 5%, and not 5% from the low, 5% from settlement, which is wild to think about because we were talking about limit down overnight. Anything else you have, Coach, before we get out of here?
No, just to reiterate one of the lessons and one of the thoughts, predefining your risk it has to be done. And if you predefine it and you see that it's too much of risk, there's no shame in. Matter of fact, it's beyond shame. It's a good decision just to stay out.
Yep.
If you're new, don't try and force yourself to make money. It's a really bad idea. Accept it. Is it within your risk profile? Take the trade. If not, don't venture. Let things settle down. That's it.
100%. Awesome stuff. Thank you, Coach. Thank you all, as always, for joining us today. If you haven't done so already, hit that thumbs up, like button. Remember that we do have sessions going on pretty much all the time. I think the content from Topstep is pretty close to 24/7. We got Coach Hoop in Discord. Sounds like you got a phone call there, Coach.
Yeah.
We got Coach Hoop in Discord doing a class right after this in about 15 minutes. And we have Coach Ray and Coach Vince, 6 p.m., 7 p.m. Central Time. You have Dakota, 7:30 Central. We have a new session with Aaron Trades, the London Open. That is at 1 a.m. Central Time. Then Deanna's session hasn't gone anywhere. It's just changed the name. That's now the Euro Trade at 3:30 a.m. And then, of course, opening call. So, again, content almost 24/7. If you can't watch it live, we don't want anyone sitting in front of their desk 24/7 watching us, but watch it on a replay, right? Put it on while you're walking your dog and maybe listening to it. If you want to stay in tune with what the markets are doing, especially these ever moving markets, we're seeing markets move overnight, during the day, kind of all times. So if you want to stay in tune like you would CNBC, but you might actually see some people take some trades, not taking a shot at CNBC. I watch them all the time.
CNBC, I've never seen it. I don't know what you're talking about.
Never see the trade placed on there. All right. Thank you, everyone, for joining us today. Thank you, Andrew, as always, for sending over the questions. We will see you all tomorrow. Thanks, Coach.
Thank you.
Bye.
Bye.